because the Lehman moment produced pervasive structural damage through the system that wasn't rectified until the Treasury came across in terms of its borrowing, and then the Fed came across with quantitative easing. But this is not that kind of a shake-up type of thing. This is $300 billion is what they owe, and this is all manageable. The basic economics is, for all countries in all time, is that if your debt is in your own currency, you can deal with it.
You can work it out.
You could work it out. We've
Right.
seen it happen over and over again. And it's a good thing that lenders get stung or that the borrowers get stung. Okay. That's how the system works.
Okay, I want to go to my number one question to Ray Dalio. I'm fascinated by this. You and I have sat at the M Bar at the Mandarin in Hong Kong and looked at that spectacular experiment. I had the honor of Lord Patton with us the day of the Hong Kong collapse, the change essentially in polity there. How should our Western banks, the people you know, James Dimon, Staley of Barclays, Moynihan of a reinvigorated Bank of America, how should the Western banks adapt and adjust in Hong Kong to new China realities?
Well, I think very simply you have to decide whether the rules and the place is a place that you're comfortable with. They will set the rules, and you go in there and you decide if you're going to be part of that as a good citizen or you're not. And then, but you don't jump in and out. In other words, China's a strategic play. You're not going to jump in and out. And the amount that you're in should be that which you're comfortable with. It's the same as an investor. It's not smart to sell on the break or buy. It's a strategic play. Most investors are very overweight in the United States or other places. Diversification. There's a competition, a big competition, a war of sorts going on in technology and so on. The diversification, put the amount and the exposure that you want to have there, because you have to have places on some money on two chips, because there are risks in the United States too.
Okay, so Principles was a huge success. If President Xi read Principles, what chapter would you want him to read? What does he need to know about Dalio Principles?
Well, I think like everybody, the key is know what you don't know, what you don't know and how to deal with it.
What does he not know about the United States of America, the resiliency of this nation from the Pacific Rim, from Australia and MacArthur all the way up to Tokyo?
Well, there's a totally different approach. Whether you like it or not, we are a bottom-up individualist. It's built around individualists.
Right.
And it's built, I think.
You're the example.
And the individuals, and bring immigrants to the United States, and that the power of the individual. In China, it is the top-down, and it is an extended family. One of the leaders said to me, for example, it's like a strict parent. And so when we deal with things like video games, do you want your kids to watch video games? In the United States, we would say that's a parental decision. Generally speaking, it wouldn't be the state to make that. They would say it's terrible what's going on, and the state is going to mandate it. So that there are those two approaches, and I would say that the understanding the relative merits and understanding really how we can get along. Because there's a risk of war. There's a risk of conflict here. And so understand how we can get along. I wish that, yes, Chinese understood Americans better and Americans understood Chinese better.
I want to bring it back to not so much to Bridgewater, but the alternative investment business, again, at the zero bound. You've written about this. You've been very eloquent. Bridgewater, folks, has a great series out on YouTube with Bob Prince, really walking through the realities of being at the lower bound. Is the game over? Is the volatility so taken out, almost like a somnolent Japanese bond market, that we can't provide value anymore above long-only institutional money?
Yeah, the value of interest rates, the impact of interest rates has been largely taken out in terms of the magnitude. You're not going to have that kind of volatility. And if things go down, you're not going to have the same kind of protections from the bonds as you do. It's changed because then you get quantitative easing. It gets transmitted. so that when you need an easing, you get the printing of money, and then you have the reflation type of dynamic. So that's the way the volatility is transmitted. We've had plenty of volatility in the markets, but not in the bond market, right? Look at how the markets have behaved since in last April. They printed the money and sent out the checks. That's the way the dynamic works.
Well, what will the consultancy business be? I mean, we've all been wrong that the actuarial assumption is single digits, 6 or 7%, and everybody and people that caught the ride have been looking at double-digit actuarial returns. Are you and Bridgewater steeled for a single-digit future, or can you be more optimistic?
No, I think that I think we're going to get another round, another round of QE.
We're rid of QE Dalio now?
What? Sorry?
It's going to be called QE Dalio. You're predicting another round of QE.
Not immediately. I think that what happens is you get a taper. I think like every tightening of interest rates has been less than the one before it since 2000, since 1980. Every peak and every trough in interest rates has been lower than the one before it. And then when we hit zero, then we did QE, and every QE has been larger than the one before it, because we've accumulated so much debt and that we're now printing. I think that you'll have probably one pullback, and I'll call that a mock charge, and then you set the markets down, because the duration of the bond market and the duration of assets is longer. That means interest rate sensitivity is greater. You have that particular correction, and then you'll have another round of that. And so I think that's the nature of the beast that we're in with. The QE, understand, and that means negative real returns. The things that must happen is that cash is going to have a lower interest rate than bonds.
Is America going to go to negative interest rates?
Let me get my thought through, and then I'll come to that.
Get your thought through. Continue.
Okay. So, what you'll get is a significantly negative real cash rate, a negative and probably more significant real bond rate, and that you're going to continue to have interest rates significantly below nominal GDP growth. In other words, inflation plus real growth. The average thing is going to increase. Let's take nominal GDP. That's production of inflation and growth. You put those two things combined, you would rather own a piece of that, which is a piece of the economy, than you would want to own interest rates. That's the environment we're in, I believe.
We've got to wrap. John Paulson is saying Bitcoin is a fraud. I speak with my own words there. But what do you think about Bitcoin? Is it a durable thing for banks or for institutions?
I was going to ask them in Bitcoin. I'm not an expert on Bitcoin, but I'll tell you what I think. I'll tell you what I think anyway. Anyways, take it. It's not worth much. But Bitcoin has an imputed value, not an not a intrinsic value, and so it depends what it's perceived as. It's a tremendous accomplishment to have done that programming, not have it hacked, and to have its advancement. At the same time, and so it will have the perceived value that it is given by the marketplace. Now, right now, if you take the value of Bitcoin, you take the price. What should the price be? And since the quantity doesn't change, you know what it's a function of demand. Right now, Bitcoin is worth a little less than $1 trillion. Gold, all gold in existence, is worth, if you take central banks and jewelry out of it, about $5 trillion. So it's about 20% of that market that represents, the hedge market and so on. I think that I think if it's successful, really successful, it's not going to be a lot more than that. And if it's and also if it's successful, there's a risk the government will outlaw it.